Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about two major investment banks that think interest rates in the UK are going to crash or drop significantly faster than what the Bank of England is predicting and what the markets on the whole are predicting as well. I'm going to talk about why that's potentially good news, but also bad news for us as a UK householder, and what you can do right now to protect yourself and make sure you get the best rate for your mortgage. Now, if you're new around here and you haven't done already, do subscribe to the channel over there and hit that bell notification. We're on the way to 37,000 subscribers now. We give you all the latest news on the property market, on investing in property, and much, much more. And let's get some views on this video. How do we do that, you ask? Well, very simple. Smash like, tickle like, do something to that like button. That helps with the YouTube algorithm. And while you're there, press that share button. Maybe you can WhatsApp this to someone, Facebook it, email it to someone that really wants to know what's going on in the market. So take a moment to do that as well. So what is going on? Well, it's been a really interesting week. We've had really the Bank of England cut rates, which was good. So the base rate went from 4.75% down to 4.5%. So those people that are on a tracker benefit pretty much straight away from that, which is really, really positive news for them. So that's a win in my book. We had 8 lenders that cut rates this week, some of them by more than the Bank of England base rate cut. So the Bank of England cut 0.25%. We had some lenders that cut by 0.3%. If you want to know who they are, if you click on the Property Accelerator below, then you can click on videos. You can see the videos in the last week, and it's a video about major lenders cutting rates, 8 of them. So that's good. But going forward, the Bank of England have said it doesn't look so great. And they talked about a couple of topics. One was Rachel Reeves' budget. They're saying that that is impacting UK economy. There are already big companies cutting employment at the moment. We've seen Sainsbury's, we've seen Tesco's, we've seen other supermarkets cutting because of the national insurance rise and the minimum wage increase as well. And there are thousands of other businesses doing exactly that because of the market as well. We've also had talks by the Bank of England about the Trump tariffs. They might seem like they're off in a far distant world. Even if the UK isn't tariffed, this could impact us massively. I've done a video yesterday about that. Go and check it out. Keep the comments kind on that. I know you either love Trump or you hate him, but try and keep it kind in the comments on that one, please. So the forecast for UK PLC, the UK economy, have been downgraded. We were expecting our economy to grow by 1.5% in 2025, and that was only in November that they were feeling that. They've cut that to 0.75%, which isn't good. The last quarter, the UK economy shrunk by 0.1%. The forecast for this quarter is growth of 0.1%. So that would narrowly avoid a recession, which is 2 back-to-back quarters of negative growth. But 2 investment banks say that's not what's going to happen, and they feel that the UK is going to struggle more than the Bank of England predicts. And so this is Morgan Stanley, first off. Now, they're saying that the interest rate by the end of 2025 will drop all the way down to 3.5%. That means that we would have still 4 cuts to go in 2025, which will be good. Now, the Bank of England was saying 4 cuts in December. The markets feel like there's a 2 to 3 cuts maximum left in the cutting cycle in 2025. Morgan Stanley is saying you're going to see weaker economy projections. You're going to see a very, very close to a recession, which I think is true as well. I think it's crazy that we're not in a recession, or we just haven't managed to get into one. We've just avoided it narrowly, so close every single quarter. But there's a lot of bad news coming down the pipeline. You've got higher inflation, you've got energy costs going up, you've got minimum wage going up, which impacts small businesses. And so those things are gonna mean people are going to spend less in 2025. It's not going to be a year of rapid growth for sure. So Morgan Stanley, they're saying 3.5%. Let's see what is true. Now, Goldman Sachs, they agree there or thereabouts, but they've got something slightly different here. And so Goldman Sachs, they are saying that they feel by June of 26 that we will be at 3.25%. So 1.25% lower than where we are. Again, they're stating that the UK economy isn't looking strong. It doesn't have any growth in any real sector that they can see that we should be excited about. They feel that unemployment is going to go up. The Bank of England agreed that. The Bank of England said in their meeting this week that potentially unemployment could go to 5%. It's at 4% now. So that's a lot of people, hundreds and hundreds of thousands of people out of work within the next few months, which isn't great. You've got the cost of living going back up again. That's going to slow down things, and people will spend, but they will be more selective on what they spend on. And what they're saying as well is that businesses are going to take the hit, some of this, and their profits are going to reduce as well. So you're going to see more bankruptcies in business. You're going to see businesses that need to reduce staff headcount as well. And so it isn't looking great. What does this mean for mortgage rates? Well, mortgage rates is quite good. It means that mortgage rates are likely to come down, and you probably will start seeing mortgages by the end of 2025 at 3.5%. We saw some of those last summer, and that was because they were trying to stimulate the market and get it going again. Now, this could be dangerous for people that have got a small amount of equity in their property, because while the rates might be 3.5%, you might not actually be able to get a deal because you don't have enough equity, or you're in negative equity if you bought recently with a 5% deposit. Because if this does all come to fruition and the rates do come tumbling down, it's likely that house prices could move a little bit as well. It could go down 1%, 2%. I don't think you're going to move into crash territory at all in 2025, but things could happen that mean things get really tough for people to refinance and remortgage. Now, if you've got an older property, you've invested in it for a while, or you've added value to it, you should be fine. Making sure that you keep your jobs important, and making sure you get your income and your credit rating good so you can have the pick of the lenders, that's going to be an important consideration for 2025 as well. So you need to look at those reports, clean up anything that isn't great, because lenders are going to get more selective. We're seeing that already. We've got lenders that have said we're only going to lend to people that have got an A or a B on EPC ratings. That's already the best deals you can get with some lenders. They're already starting to say stuff like that. So go and see what you think here. But Goldman Sachs and Morgan Stanley, big investment banks that their job is to predict economies and make money for their clients, they're saying it doesn't look great in the UK. And they're saying that because of that, you're going to see faster cuts than you might expect. Let me know what you think in the comments. I know a lot of you feel the UK economy isn't looking great, so you probably agree with this. Let me know in the comments below. Do smash like, and do check out all the other content on my channel as well, including this video right here.